Journal. You implied that a journal needs to be kept of significant events and plans for future moves. I'm working on a better one now. Really, it doesn't have to be anything formalized. Just write down your thoughts. Glossary, there's one on the download area. Number 7, checking the time. Wow, 23 minutes already. I'm only a third of the way. Could you please look at the following trade I entered on 8/22? Okay, let's go over to 8/22. I don't have a time, so I'll just have to look at price. Let me delete the Fibonacci. 22, bought at 9861. 986. That's 63. Okay, so bought at 9861, stop loss 9828. Okay, there's that price. Let's look over here. 22nd. Okay, she could have bought right here. I think it's a she. I don't know. They could have bought there. Stop 9828. Right there. Okay, so you buy here and you get stopped out there. Let me look at what you could have been trading here. Well, a couple of things. First of all, this looks vaguely familiar. I'm telling you, I forget about trades really, really fast. The pennant pattern originally was this. Okay, I think I do remember this one. I think I got stopped down on a completely different trade. So there's the pennant pattern. So the trade actually gets triggered to the downside, whipsaws back up, hits this resistance point, comes back down, starts moving back up. If you're going to trade up here, the trade is above that point there. Okay, you've got to trade above the last logical point, which is all the way back here, if you're going to trade the breakout. And you can see the market broke out, went into profit very quickly, retested, so there's your little dipper pattern, and then shot off. So there you go. Bought one lot at 99.15. That's going to be above here on the 22nd, so that's got to be somewhere in this area here. Stop loss 98.85. Same kind of thing. I'm not sure what you were trading as far as a breakout. The breakout actually was a little bit lower down here on the high based on the recent trading, although I could understand 99.15. I think this was a weekly breakout level. But again, as I've been saying, you've got to watch out for these whipsaws. One way, now that I'm thinking about it, one way to combat the whipsaws, like I said in the daily video, is to wait for the little dipper. That requires patience. It requires faith that the market, you're not going to miss out. Okay, here's a little dipper. Here's a little dipper. There's a little dipper. There's one. So I mean, there are little dippers all over the place. Okay, remember, if the professional money is behind, let me say it this way. Would you rather be behind a move that has a bunch of rookie traders and the dumb money behind it, or would you rather be behind the professional money? Well, you know, that may not be enough information. Let's assume for the moment that the professional money really does make the trends. So if the professional money makes the trends and the rookie traders and the dumb money do not, which one would you rather be behind? Well, the professional money, right? At least I would. So if the professional money, remember I like if-thens, if pro move, then little dipper is virtually guaranteed. And I say virtually because not all the time. But you got to trust this. You got to have faith in that. You got to realize that if the professional money is going to push the market above a resistance point, you can bet your bottom dollar they're bloody well going to retest that point because they're smart. So a little dipper is a very good way to validate a trade. Okay, but again, you got to get over this feeling like you're missing out.